TTD, the trade desk. Trade desk is basically an ad tech platform. So if you wanted to run an ad, folks, on any particular network, you might go through TTD. This stock has exploded higher over the years. The trade desk is something that a lot of people didn't really understand their business. I think now they're grasping it more, Pete. And with everybody wanting to point and click and just get the information right away rather than picking up a phone and calling Jon Hamm with the madmen and all that to get an ad running and so forth. Trade Desk is really hitting it. And this is a $40 billion company that collapsed today on an earnings miss. I'll say, Pete, for everybody watching, that I bought it today. Why did you buy it, John, when it's down this much? Number one, I think it's overdone. Number two, as we said yesterday, you can sell puts if you wanted to say, hey, I really like it here at $82 a share. Maybe I'll sell the 75 puts. Maybe I'll sell the 80 puts. I didn't do that. I bought the 85 puts, Pete, and I sold the 95 calls. I bought the 85 calls, sold the 95 calls. So I'm in a 10-point spread. I paid $3 for it. That kind of trade, folks, means I can make more than double my money because obviously a $10 spread, you paid $3, I can make $7. That's the kind of risk reward Pete and I look for when we're doing trades like the one I just described. I am not telling you to do that trade, but 2 or 3 weeks from now, hopefully, when we're back here, I will be telling you, well, yeah, the stock's back to 100, Pete. It was 125 before the earnings, but it's back to 100 now. And guess what? I just turned $3 into $10.
John and I don't talk about stuff like that very often with each other. He does his thing, I do my thing. He's in, Puerto Rico these days. I'm up in Minnesota. So there's, not that we can't phone call each other, but we don't, and so it's interesting because as you were saying that, John, that was exactly what I was looking at. I wasn't looking at the call spread. I was just looking at the stock, but I was looking at the fact that this is their first miss in 33 quarters, and there's a good reason of why they missed. And so I think that there's a lot of reasons why you'd want to look at this one and say, okay, it's down there very near the 52-week lows, which was 73. It's trading around 82 last I looked. They've got an incredible balance sheet. As I said, they've only missed on their revenue. Out of 33 quarters, they've missed this one. So all that being said, I think they just didn't do things the proper way that they've been doing them. And by the way, they've decided to buy $1 billion worth of their stock back as well. So I think that they are sitting in the driver's seat still, John. I think this has been oversold, and I think there is an opportunity in this one. So I would have said that coming into today either way. But now that you said you've got some options in there, I might be looking at that myself because I really was looking at this one saying, you know what? This is just one quarter, and I think it's getting overly hit today. So for that reason, I really like it a lot down here.
Yeah, and folks, my two favorite things to do are when we see unusual activity to follow that. And if I see something like Super Microcomputer, SMCI, sold all the way down to $17 from 100. Hindenburg might be right, but they're not going out of business. And now take a look where that stock is. That's why I did the trades that I did, because I wanted to put my money where my mouth is. And I also wanted to take less risk. I don't necessarily want to buy, I trade between 50 and 100 contracts at a time, Pete. So as you know, that means 5,000 to 10,000 shares. 10,000 shares of this stock would be $800,000.
Yeah.
Well, I don't want to spend $800,000 and lock up that much, but I can spend, I can buy 100 lot of call spreads and spend 30 grand and control 100,000.